Hello and a warm welcome to everyone joining us today. My name is Gabriela Güntherroth and I'm your moderator for this session. So actually you are joining a very unique format, as we do have many different sessions throughout the day where we give you EY insights on key trends. So please feel free to join as many as you want of them, even if you have not registered. And I'm very delighted that you're joining this session where we will talk about empowering treasury as the strategic partner and learn more about the role of treasury. To discuss this topic, I have two distinct experts with me, so please join me in welcoming Sven and Ike. Welcome.
Thanks very much.
Very happy to have you here today. And before we dive into the topic, let's start with a quick introduction about yourself, about your role and your experience. Sven, please.
Thanks very much, Gabriela. First of all, thanks for having us here and hosting us. It's always a great pleasure talking about a heartblood topic of treasury. So my name is Sven. I have the pleasure to head our treasury practice for EY Switzerland. And in that role, kind of supporting all our corporate and also insurance clients along the entire value chain in treasury. I'm doing this since roughly 11 years. Before that, I started my career in the industry as a corporate treasurer, so able to combine the practical and the advisory part for treasury.
Ike.
Oh, good. Thank you, and also warm welcome from my side. My name is Ike. I'm part of Sven's treasury team, supporting our treasury clients along the whole value chain of treasury. And I'm focusing specifically on treasury technology, meaning assessing, implementing, selecting treasury technology. And my second focus point is treasury process excellence, meaning analyzing with our clients, of course, analyzing their treasury processes, identifying bottlenecks, improvement points, and enhancing their processes, of course, aligned with their treasury risk strategy. Exactly.
Wonderful. Thank you very much for this introduction. And for our audience online, please ask questions at any time during the sessions. We have a chat function where you can submit your questions, and we will address them at the end of this session. So before we dive into the topic, actually empowering treasury as a strategic partner is a very strong title. And let's set the scene, Ike, by explaining how the role of treasury evolved over the recent years.
Yes, thank you, Gabriela. So in recent years, treasury's role evolved significantly, from being perceived as mainly a cost center, to now becoming a really value-adding service center, or even a profit center, depending on how you really play your financial exposures and your liquidity management. The transition has been accompanied by the centralization of mainly cash and liquidity management, enabling organizations to better deploy their financial resources and perform more effectively. Additionally, there has been the centralization has also been on the treasury function itself. So establishing, for example, in-house banks, payment factories, which streamline the treasury processes and enhance efficiency. Nowadays, treasury departments really try to focus more on strategic financial risk management and liquidity management, ensuring that their organization is well prepared to navigate financial uncertainties. Also, the reliance on data analytics and technology overall has increased, enabling now's treasury to have better decision basis, to taking better and more informed and quicker decisions. Also, the collaboration within the organization has evolved, meaning not only within the finance organization, but with the whole organization, which provides us with the opportunity to follow a more integrated financial management, and aligning, of course, the treasury activities with the overarching corporate strategy.
Sounds like a huge evolution. So what would you say are some of the key drivers behind?
Maybe I'll take that one, Gabriela.
Please,
I mean,
Sven.
drivers, there's been quite a lot, to be honest. And of course, if you look back in terms of the technology development that happened over the last 10, 15 years, that enabled treasury to actually grow into that more value-adding service center, right? By having the chance to centralize, as Ike mentioned, not being needed in a local presence, so you could start to centralize. There is more technology-enabled solution provided by banks, by the corporate themselves, by treasury management systems. And also, if you look into the fintech space, which nowadays nobody talks anymore about fintech, everybody talks about AI and crypto, but still the fintech has been an area where those technology companies have built really good solutions where treasury really benefited from kind of enabling them to become more and more that strategic partner. So technology, I would say, definitely one. Then, of course, we've seen also a lot of cost pressures, like in every function, right? So Treasury had to make sure to reduce their efforts. And if we have compared the last years, how many activities have been performed locally and not leveraging synergies within a central function, that has been very significant. To be honest, we still see it quite often today. So there's still room for more centralization and more improvement in terms of efficiency. And then maybe one thing which probably stands a little bit out is also the geopolitical developments, right? And if you look back into, let's say, up to 2-3 days ago, I would say the strong globalization that happens over the last 10, 20, 30 years, that has, of course, driven the importance of treasury because global trade has been enabled. So corporates had to manage different country risk, different currencies, more local liquidity was needed. So Treasury had to speed up, to step up, to serve the company to make sure that they can actually be that partner to go into those markets and actually do their business. So historically also crisis has always been kind of I'm not saying a good thing, don't get me wrong, but a thing where Treasury was really empowered. I mean, looking back into the credit crisis, 2007, 2008, everybody was looking at Treasury. How do we get over the liquidity crunch, right? Be it COVID, when suddenly corporates needed to be very good in forecasting because liquidity was also, again, short, and we needed to start to do scenario analysis. How long can we survive without 30% revenues, etc.? So all these things had increased the importance of Treasury, being recognized by CFOs, by the business. And I think that also made this evolution in Treasury quite important. And sorry, if you allow me just one comment about these last 2-3 days, this will be the start again where Treasury will have a significant role to play. How does the business navigate through all these tariffs that now are coming from the US? This will shift a lot of the global trade. It will shift potentially in terms of country risks, currency devaluations, be it the US dollar, be it others, where Treasury will have a significant role to play.
So really, I understand now that Treasury is becoming a strategic partner, but the question is, how can they show and demonstrate their value to the organization?
Yes, I take that if that's okay.
For sure.
Maybe let me break this question down in 2 parts. First, I will describe to you why Treasury should be perceived as a strategic business partner. We don't even have to look that far. It's Treasury's role itself. Treasury is managing the liquidity and the financial risk of a company, which is directly impacting financial health and success. This criticality and importance of the tasks alone already shows you the need that Treasury needs to be perceived as a strategic partner. In the capacity of Treasury managing these risks and this liquidity, they are well connected with the financial market, also have great relationships with financial intermediaries like banks, insurances, and therefore should always be involved in any decisions about investments, debt allocation, etc. Furthermore, with Treasury's ability to provide financial insights, they can help operations or business to drive growth and increase efficiency. So for us, it's really clear, Treasury should be seen as the sparring partner to the CFO and an internal advisor to the business. So second part, concrete initiatives. Let me name a few. So important is that Treasury is really demonstrating their forecasting capabilities. Another point is creating a culture of free cash flow generation, which is quite important and really interesting for the investors. Other concrete initiative is the establishment of an in-house bank, where we streamline financial risk, cash, and funding management and risk management. And other point is the establishment of a centralized payment factory, where you streamline all your corporate payments. Also important is that Treasury can also advise operations or business. So for example, in a lot of commercial contracts, the hidden currency risk is really not identified. Their Treasury can really add value by providing their experience and knowledge.
Yeah, I mean, you really convinced me, but the question is now, and for all people online that are joining from a Treasury department, so how can organizations now really prioritize to elevate their Treasury's function maturity?
If I may, just quickly, because you asked before as well on the value add of an
Yes.
organization or how Treasury value adds, and let me maybe pick that quickly up, because I think it's quite instrumental to understand that. We see two elements, right? On the one hand side, it's the operational value creation or value proposition that Treasury can do. I mean, you talked about it, visibility of cash management, centralization, making cash a corporate asset and accessible to the group to ensure you can kind of use the cash to maybe fund investments in other countries. Then working capital, also something which is more and more coming into the remit of Treasury, and not only for cash, but also for inventory, for DSO, DPO management, etc., where Treasury can really add a value to the operational part. And then the funding piece, of course, that's very obvious, right? That we discussed at the beginning. You try to fund centrally, but obviously some countries, some jurisdictions, you need to fund locally. So you want to make it mostly efficient and effective, and that is really the operational value that Treasury creates. And in the end, it's all about risk management, and we have it also in the title, right? It's financial risk management, obviously, to manage the risks of a company, to reduce volatility. And when Treasury does a good job, typically you don't hear anything about it, right? Because then you have no volatility and you kind of manage those risks effectively. But it's not only financial, it's also like fraud risk. We had a session on cybersecurity as well. It's super important because Treasury sits on the big assets of a company. And if something goes wrong in terms of fraud, in terms of cyber in Treasury, then there's a lot of money which can be lost. And I think those are all kind of operational value propositions. And then there's the strategic element, right? Which is more than the capital allocation, making sure that the firm has the flexibility, has sufficient funding to also capitalize their subsidiaries. And as I already mentioned quite dominantly, transparency, right? Today, CFOs and the finance organizations, they need to do quick decisions, fast decisions, and for that they need transparency, and that is where Treasury can definitely add a strategic or be strategic as the sparring partner to CFO.
And when you would now recommend concrete actions, how to put that to the next maturity level in an organization, and maybe you can with us touch already a little bit on the technology landscape. I mean, in our days we talk a lot about AI and machine learning and so on. So what would be the impact on the Treasury function in a company?
Maybe also again splitting this question, really great question, in two parts. First part, how treasurers nowadays can increase their treasury's maturity. And here I see three concrete steps that everyone can take. First one is really making sure to have a vision. What kind of treasury services do you need to provide, and to what extent do you need to provide them? With our clients, we normally do that in a treasury target operating model design, where we look at multiple different dimensions ranging from organization, governance, over processes, technology and data, and making sure that we really define a clear vision of what we want to provide, so to speak, a to-be state. And here I just want to make a quick note, because it's not required that every corporate has the best-in-class treasury. It really has to, again, be, let's say, aligned with the corporate strategy and the business. The second point that I see is then to make sure to assess your processes and your treasury landscape and also invest in that. So making sure that you look at your processes and find the pain points, find the bottlenecks, and assess your treasury technology landscape. Is it still fit for purpose? Because normally we see these technologies are implemented and then they are just, let's say, left in the corner. So making sure to assess, is it still fit for purpose? And then you have a clear understanding where you are. Combined with the first point, you know where you want to go. You can define gaps and initiatives to close these gaps. One last point that I want to make here is with all the technology and all the great processes and strategies, the battle is not won. You need the right people, right? So also as treasury is evolving, also the job description of a treasury is evolving. It's no longer enough to have the functional technical knowledge of treasury, but nowadays it should be combined with a technological affinity so that you understand these new, let's say, technologies like AI, machine learning, and you can apply it in treasury business cases. So important to always also invest in your people and their development.
Sven,
fully agree
please
to
add.
that. Yes, I'd like to add one thing. I'm 100% agreeing on that, of course. I think one element where Treasury also needs to step up, or the finance organization should step up, is involving the Treasury function in overall finance transformations. And we are pushing this very, very heavily with our clients, together with, of course, our big range of services we have at EY, our brilliant network. But we see that Treasury sometimes plays a bit their own game, or has to play their own game, and is not fully involved in finance, overall finance transformations. This can be the S4 upgrades that a lot of our clients have to run through, right? Take Treasury on at the beginning to assess what does that mean for Treasury? Can Treasury benefit from that transformation? Or not only benefit, but where can Treasury add value? Here comes that again, right? Treasury to add value to the business. But it's not only S4, right? It's end-to-end process automation topics. It's shared service center, right? We see a lot of projects where we help our clients to build up their shared service centers. And Treasury can also support there and be more efficient by giving kind of recurring tasks into these shared service centers, reducing the center, again, cost reduction as well, a big element there. And another one is the FP&A transformation. Also, that is something we see a lot. There is a very strong FP&A function, and then there's a very strong Treasury function. Both forecast cash liquidity, but it's never aligned, it's never matched, right? And I think if clients go onto an FP&A journey, it's super important to get Treasury on board from start to make sure you have, again, a unique or a unified forecasting solution.
Yeah. And before we jump into the Q&A section, I mean, we heard a lot of theory, and I think we should take that now into practice. And I'm sure based on your experience, you can share some good examples on how you help clients and how you really brought value to the Treasury function.
Yes, that's a brilliant question. I think what first comes to mind is, let me just do a client example here. We have a multinational client that we were working on last year. Multinational, really successful, but the treasury was not that mature. So they were still, let's say, working a lot of manual processes, working with Excel, creating management reports within PowerPoint every time by hand, logging into various e-banking platforms for their payments. So really not that a mature treasury that you would expect from such a company. And then we went on a journey with them. And in 9 months, we were able to, let's say, enhance this really manual, laborious treasury function to an automated treasury function by implementing a treasury management system, which is fully fledged, end-to-end processes, automated. And this, of course, there you can see the value really tangible. All these efficiency gains that they make, all the data that you have in one place, where you can then also, by just a click of a button, create management reports, have better visibility, and also can, let's say, make better decisions again. That's one concrete point. Another one that I would like to mention is the rationalization of bank fees. Also, again, here, client example, we went in, they had not a clear overview of what they are paying their banks for. So we went in there, analyzed 1.5 million of annual bank fees, internal benchmarking, external benchmarking, and we then identified a whopping 640k Swiss francs of annual savings that they could reach. But here I have to mention they didn't went for the full amount. In the end, they went into negotiation and got out 350k Swiss francs annual savings, reoccurring savings. So that's a really tangible example where treasury can add value by reducing cost.
Yeah. No, I agree. That's a very nice example. And based on this experience, what would be your recommendation? In which finance topics should treasury be more involved to exactly demonstrate this added value? So Sven, maybe you go first.
Yeah, let me maybe take that one. I mean, obviously, treasury being part of the finance function, that's the most obvious one, obviously. But there is other areas. I mean, Ike mentioned talked about the hidden currency risks, right? In procurement, in the business, when it comes to negotiating contracts with vendors that might have currency options in those contracts, or not even an option. Where kind of treasury should act as a sparring partner also there, or an internal consultant to procurement or to the business to help actually manage those risks in the contracts. And then one other element we didn't talk about yet where we see treasury should be more involved is in transactions, M&A. So we've seen that quite often that treasury is at the table too late when it comes to preparing a day one readiness, when it even comes to a due diligence to assess the financial risks, where treasury should have a look at where those risks actually sit. And in the end, when it also comes to the transaction itself, there is this big topic about fund flow memorandum at closing, where it needs to be very clearly defined from which account, which amount goes in which currency to which account. And that is where treasury should be at the table to actually support.
Good to know. And actually, I would like to address some of the questions that we're getting from our online audience. And I'm getting an interesting one regarding the cryptocurrency and digital assets and treasury. What would you say, is that also part of their discipline and should be under their remit?
Can I take that one?
Yes, sure.
That's, of course, a super question, and doesn't surprise me that it comes from the audience. And the clear answer is yes. I mean, it's something that treasurers should need to look at. We see, it depends a bit on the industry, right? If you're in the consumer good industry, we see a lot of clients that are already very active in the so-called Web3, meaning selling tokenized assets in a virtual world, where they pay with whatever cryptocurrency. It doesn't have to be Bitcoin, can be anything else. And somebody has to store those digital assets. Somebody needs to make sure that those cryptocurrencies can be translated back into fiat currency. And guess what? It's treasury, right? In the end, it lands on the treasurer's desk. So I think that is something, in particular in the consumer goods industry, but also the other industries. I mean, we're talking about CBDCs, for example. So central bank digital currencies, which are actually quite a good instrument to support quick, real-time, fast and secure payments. And these, I'm a true believer that this comes maybe not tomorrow, but maybe in the day after tomorrow.
Day after tomorrow. Very good. Let me take a final question. We talked a lot about the value add. So obviously the key question is how to measure that one. I mean, we heard it in the example before. You can achieve cost savings, but are there more measures you can really take?
Then I take the next one, right?
For sure.
So yeah, in the previous example, you see like easy measures is like cost reduction, but you should do a little bit a more strategic approach to that by defining a framework where you have certain KPIs for treasury set out to really measure, let's say, the efficiency and effectiveness of a treasury function. And there, just to name a few, there are some really treasury-specific KPIs. For example, hedge effectiveness. How effective is your hedging? The visibility of your global cash. How much of the cash do you see? Cash centralization, forecast accuracy, just to name a few. But
Wonderful. Well, I really can say I have the experts with me, so thank you very much for your insights. I'm really convinced Treasury is the strategic partner. Thank you very much. And for our audience online, I would like to highlight our next session, which will start at 12 o'clock and talk about reshaping results and how to navigate challenging times, an absolute key topic. So I encourage you to join at 12 o'clock. Thank you very much for joining this session. I hope you enjoyed it, and bye for now.